So that was HUL management talking right to ET now after the quarterly numbers, and one of the stock which is steering in trade even in the volatile markets today. But now let's shift focus and talk about the fundamental parameter, the long-term trajectory of the market. And for the same, we have Dikshit Mittal, Senior Fund Manager, Equity LIC Mutual Fund, joining with us. Dikshit, good afternoon. Thank you so much for giving your time to ET now. Mansi Dave this side. Trump announces 25% tariff on India starting August 1 with penalty for trading with Russia. The largest news flow which is coming in, but the Indian markets are digesting the fact quite maturely. Tell me, how quickly do you think the Indian markets will digest the news on a complete basis, and what are the implications of this on the face of it? How do you see this news flow?
Sure. So I think market is still hoping that this is not a done deal. So this is a negotiating tactic from the US. I think it has happened with other countries also. Like initially the higher tariffs were threatened, and then there was some kind of trade deal then was basically finalized. So we are also hoping that maybe in the end, like it may take some time, it may take some more rounds of discussions, but eventual outcome should be lower than this kind of tariff. But if this tariff goes through, I think it can create large supply disruptions globally, even in US also. It can create kind of huge, you can say, inflation or slowdown and all that. But I think looking at all the factors as of now, I think market is still pricing in that there will be some kind of favorable deal and eventual tariffs will be lower than what has been threatened yesterday.
Okay, so market is penciling in lesser than 25% tariff that was announced yesterday. Mr. Mittal, good afternoon. Ashesha this side. Also wanted your thoughts on the volatility that we are seeing in the market. Do you believe the worst of volatility driven by this global turmoil and uncertainty related to tariff is perhaps behind us? And which will those sectors be where perhaps the sectors which are not impacted much by global turmoil?
Yeah, so I think global uncertainty, at least for the near term, is here to stay till we get some more clarity on the tariffs. So even on the geopolitical, also there has been many news maybe in the last 1.5 years. So I think in the near term, we don't see any indication that this volatility will subside. But at the same time, if you see for the last 1 year, Nifty 100 or Nifty 50 returns have been more or less flattish. So market has been trying to consolidate, digest whatever news is coming in, and at the same time there has been some earning growth which has been coming in. So we have grown around high single digit last year. So to that extent, valuations are now also becoming slightly more, you can say, cheaper as compared to 1 year back. And at the same time, last 1 year we have seen large, you can say, fall in the global bond, not global but domestic bond yields also. So that is also leading to some kind of higher multiples into the equity. But I think near-term volatility is expected to stay. But at the same time, downside seems protected as of now because large components, large segments of the market, they have not gone anywhere. But at the same time, earnings have been coming through more or less largely in line. So I think we may still spend some time within this range. So that is the take as of now. But if one is ready to take more than 1 year kind of view, still I think there is money to be made. But one has to be slightly more reasonable in terms of return expectations, at least for the next 1 year.
That's right. Dikshit, India's textile sector is currently a key focus for investors, with the nation standing as the world's fourth largest textile exporter. A significant portion, let's say 28% of India's textile export, are directed to the US. With this tariff implication news, the textile sector is one such which is feeling the most heat. What's your view over the same?
Yeah, so within the textile also, I think we have large market share in the home textile space, maybe bed sheets, towels and all. So the companies who are present into that space, they have around 60 to 70% exposure to the US as a percentage of their sales. And if the threatened tariff goes through, I think it can hamper their growth as well as margins materially. But at the same time, if you see on the apparel side or other segments where we are more inclined towards the European markets or UK markets, so the companies present into those segments may not be that much impacted. But anyway, because textile as a sector is a very low margin sector, so companies are working on thin margin, so they don't have the capability to absorb this kind of tariff hike. So eventually it has to be passed on to the end customer. But in the meantime, this kind of tariff uncertainty has created some kind of volatility. So when we talk to the companies, orders are getting deferred. So that is the way. But I think eventually, if these kind of tariffs are eventually passed on, I think textile companies will have a tough time, at least till the clarity comes in.
Textile companies will have a tough time, but what about chemical companies then? They also export a large chunk of their revenue to the global market. What kind of impact could this uncertainty around 25% tariff on Indian goods to the US have on chemical sector then?
Yeah, chemical is more B2B in nature, and the kind of value chain where we are present, especially in the specialty chemicals. So we are more into the intermediates, technicals, or AI kind of space, where the value of these ingredients is very, very small as compared to the end product price. So chemicals, especially the specialty chemical, also require some kind of technological edge, economies of scale, and also the largest competitor is China. So we need to see what kind of tariffs are put on China also. So relatively, chemical companies are better placed as compared to textile, I would say. And mostly we are exporting chemicals to European markets also. Like most of the listed companies have a 15 to 20% exposure to the US. And large part of the sales happen domestically as well as to the European and other geographies also. And also looking at the kind of value addition that we do in chemicals, the margins are pretty high. So I think that sector is slightly more better placed as compared to textiles.
Absolutely. Dikshit, thank you so much for your views on the market as well as the global front. It was nice talking to you. Thank you and have a nice day.
Thank you, Marcia. Thank you.